Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is Pyotr Kurzin. He is a geopolitical strategist and a podcaster on YouTube. Welcome back, Pyotr.
Good to see you guys. Thanks for having me back on.
Yeah, it's an absolute pleasure having you back on. The world is going crazy, Pyotr. We are seeing more geopolitical issues happening all across the spectrum, and that's why I wanted to have you back on, and we'd love to have your thoughts. What is concerning you for 2023, and how will it affect other, like, let's say, commodities like gold?
Yeah. Well, I mean, that's a pretty big question, and we're quite into the year already. I thought at the beginning of the year Iran was going to be one of the biggest issues, but it's not. Obviously, the war in Ukraine that continues to have impacts on markets around the world. But I would say specifically around gold, I mean, and natural commodities like that. I mean, I'd look at the Central Asian states, so like the stands as they're known. Whilst gold isn't the main commodity in that area, there's been some instability, some clashes previously between two of the smaller countries, Tajikistan and Kyrgyzstan, if I remember correctly.
Mhm.
And we had the Victory Day parade on May 9th in Russia, and a lot of those central stand states were in Moscow to celebrate that. But if you look or scratch beneath the surface, there's been movements to get sort of closer with China, and China obviously is making movements with its Belt and Road Initiative
Right.
as well, to sort of bring some of those countries more on side. The other thing that I could potentially see affecting gold a little bit is just the overall global economic outlook. I'm not going to pretend I'm a market forecaster and say that I know if we're in a recession or we're not. No one seems to be fully agreed on that. If you ask people in Goldman Sachs or JP Morgan, or you ask people on the street, no one seems to have a clear idea. But gold has teetered around 2000, 1900 on and off for a while now, and it does seem to be somewhere that people revert to. Yeah, gold's looking, I would never not feel relatively okay about gold, but again, that's just my opinion, not financial advice. But yeah, so it's a complex one. We're in a
Yeah,
difficult world at the moment.
absolutely. That's Piotr. There's also inflation shockwaves, like you mentioned, gold and all the difficult moments across society right now. We're seeing inflation shockwaves happening across the board. There's also an energy crunch happening in Europe. What's your concerns specifically for Europe right now for 2023?
Yeah, so I mean, if you ask me in another episode, maybe in the future, a couple of months, next quarter, it may change. But in the
Right.
immediacy, I mean, the war in Ukraine is just, we've had jets or new missiles promised by the British to the Ukrainians. We're constantly reading about this upcoming counteroffensive, although one wonders if that's just information propaganda to continue the support by the West, or a lot of these psychological elements playing in there.
Right.
But in terms of like energy, I think Turkey's election on Sunday, so May 14th, is huge, because Turkey has, for a couple of reasons. So basically, Turkey's a main thoroughfare for gas from the Caspian Sea. You've got about a potential of about 7 to 10% that could supply EU energy, specifically coming from the Azerbaijani gas fields. Then you've got different, about 3 or 4 major pipelines that make up what's known as the South Gas Corridor, valued at around $45 billion, and they produce, I think it's about 10.5 BCM per year. It was only completed, like the broader project, in 2020. So it's a huge area for potential energy supply. That being said, the EU has continued to obtain energy from Russia, just not via seaborne methods. This was introduced in December 2022. The G7 also introduced a price cap. And then that led to Russia, I think. I had an interview with Frank Juster on my channel about this. It cut the Russian output by about 500 million barrels of oil a day. That
Wow.
was back in late March. So yeah, you're seeing a general reorientation of the energy from Russia to, I mean, this is what's happening. You've got the Russians shifting that energy supply to client states like India or China at reduced prices, but then they're just supplying it back to the Europeans. So you've got this. This is the problem with sanctions. They do have an impact, but unless you're willing to sanction everybody, or secondary sanctions as they're known, right, which can lead to huge strategical upsets as well as economic ones, that can have, basically Europe's kind of screwing itself. Right. In some people's perspective. So, but then, people are like, well, we can't let Russia just get away with what it's doing in Ukraine. So there is a huge amount of considerations to be made around this policy, economic mismanagement as well. So, I think over the summer, things aren't going to be too bad. Again, it depends, I think, on the more broader macro level. Obviously, what the US is doing, the UK, we've got inflation seemingly getting better, but we had the Bank of England increase interest rates to 4.5% for the first time in almost 15 years. We've got the prospects of the US entering recession, right, in all this thing around the Fed. So there's a few factors here that could impact the situation with energy in Europe as well. Whether or not we see them increasing again, gas-like supply capacity is another thing as well. But the Europeans as a collective are definitely pushing for more investment in ESG and non-renewables rather. So that's another thing to keep in mind. And the very last point I would say is just to also take into consideration what the head of the EU, von der Leyen, said on a trip with Macron earlier in April when they visited China, which was that they want to increasingly de-risk from China. So there has been this emphasis, obviously, in the past 5 or so years, the Trump administration, of decoupling from China. But the Europeans have been emphasizing more of a term of de-risking. And that could definitely play into the role of, energy, into the role of just trade more broadly. Obviously, Italy pulled out of the BRI on Wednesday. So there's movements happening, and I think that will play into the energy situation in Europe as well.
You just brought up Italy pulling out. You said as of Wednesday. What was that? What did they pull out of?
So China's Belt and Road Initiative, which is basically China's.
Oh, so they pulled out of the Belt and Road Initiative.
Yeah, so that's that's China's flagship economic initiative since 2012, sort of President Xi's baby, if you like. And yeah, it's pretty. Italy was one of only, I think, 3 or 4 European specific nations. It was probably the largest European economy that was involved. And Meloni, who's the right-wing leader of the country, has decided that enough's enough. We're going to withdraw. And, is it going to fundamentally change the situation with China or more speakingly European-Chinese relations? Not necessarily, but it does show you a growing wariness and sort of cautious approach. So yeah, it's I'd keep an eye on that, see if other countries follow or distance themselves in other ways. Yeah,
as there's more geopolitical issues happening across the world, and we're talking about energy crisis in Europe. There's now also a food supply crisis in Italy. They just reported a crisis in pasta prices rising to all new highs for pasta. And people are saying next year there could be a food supply crisis. Do you see that happening, Pyotr? Is there any risk there?
I think food insecurity is a situation that is affecting people constantly. It's just dependent on whether it's the global north or, the global south, right? So again, the underlying driver of much of this is the war in Ukraine, specifically because collectively, Russia and Ukraine amount to about 30 to 40% of wheat exports. Ukraine historically was called the breadbasket of Europe. Russia and Ukraine collectively, again, also amount to about over 50% of sunflower oil production. It's crazy, these certain specific commodities that these two countries have produced, and we've never really sort of noticed it before. Egypt is a huge country affected by this. Libya, the Middle East, massively affected. So in the case of Italy, we will see a problem with certain food. I think the price stability of certain goods will definitely be affected long term. And I think it might, you may well see an increase in imports from other lesser known countries. I'm not going to pretend that I'm an expert of which countries are, the largest suppliers of pasta or wheat or whatever, but I do love my pasta. But yeah, it's, Italy's economy just aggregately is, well, it's not grown since the late 2000s, to be honest with you. It's ebbed and flowed around 2.1, 2.2 trillion. And frankly, the fact that we have seen a decisive move by Meloni to withdraw from the BRI, to say to Ukraine firmly, you're not getting jets, not that whether or not you agree with that, it's simply Italy, I would put under the definition of economic mismanagement and political paralysis. And Meloni, I don't stand with everything she stands for, but I have to hope, optimistically, cautiously, that she, is improving the general political situation in the country. So Italy's a unique case as well, because it's been such a, shit show, aside from the economic policies of the price of food. If you've got bad politics, then that can worsen your food prices as well, insecurity. So yeah, I think the cost of things will probably go up in the short to medium term. If the Ukrainians and the Russians can agree on a grain deal or with the renewal of the grain deal, that could well improve the situation, as we saw it quite quickly did almost a year ago. But the Russians and the Ukrainians are, sticking to their X, Y, and Z's, and it's very hard to tell until things can change at the last minute. But I remain cautiously optimistic.
Absolutely. With all the chaos in the market, Pyotr, where do you see gold going by the end of 2023? A lot of people are calling for all new highs. It hit all new highs the past couple of weeks. Where do you see it going by the end of 2023 for gold?
Well, that's a tough one, again, because I'm not exclusively a gold expert. No, but I appreciate you. Look, as I say, I'm a bit of an old owl in the sense of I believe in the legacy of gold. I do believe in its stability. I do believe that, we could talk about alternative forms of currency, crypto. And again, I'm very much open to the idea of crypto, CBDCs, all this alternative thing. But with there being a general sort of, we've got US 2024 elections, and after the CNN, whatever that was, meeting, town hall, and generally
sorry to cut you off. You said a little bit earlier about CBDCs. You wouldn't mind that. Why wouldn't you mind that? Because me personally, we don't like too much of a central bank digital currency in our community. Why did you say you don't mind that?
Because I think that unless there is a willingness to compromise, crypto could be ousted completely. Again, I'm not an expert of crypto, but for me, it's this thing. Put it this way, right? Crypto is, again, I support in principle what crypto stands for. I do. I have a bit myself. And I think the problem is because it's not yet universally endorsed, people can get scared off. And therefore, if you scare people off, then it's removed. And as I said, this isn't necessarily just the US or the UK or the global north. This is the global south. A lot of southern developing countries really have a problem with money laundering. And crypto has been, again, I'm not saying it's the same level fully as fiat, obviously not, but global south countries have seen a disproportionate growth in this sort of illicit activity. And I think that India, it's just, I think for me, it's quite interesting. And I take note when India is the country or one of the countries that is pushing hardest for negotiations, discussions, for some kind of global regulatory framework. Again, I'm not taking sides. I don't want to piss off your viewers by thinking I'm some anti-crypto. I'm not. I'm just trying to be, transparent in the way that governments, not just Western, right? That's a key point here, are viewing it. So, I welcome it. If you're against CBDCs, I welcome the debate. I welcome people in the comments to push back or challenge me. And let's talk about it.
Absolutely.
Yeah.
Well, Piotr, it's an absolute pleasure having you back on, and hopefully, as the market develops in the next 2-3 months, we can have you back on Wall Street Silver.
Yeah, I didn't fully answer your question about gold, but
Oh yeah, yeah. Answer it.
no, I think it would be I think I read somewhere that it's still trading above, 2K, and
Yeah.
considering the bull momentum, there are some people thinking that it could break its August 2020 record.
Hmm.
Maybe we could see it, go to 21, 22. Again, I think it's really dependent on a lot of exogenous factors, not just within the markets, but the global macro scene. And of course, all these geopolitical tensions. I mean, what we've seen in the past 3 months with peace developing in the Middle East, the Chinese balloon, I'm struggling to keep up with you and it. So, but yeah, so I'll probably be completely wrong. So again, don't take my word as financial advice, everyone. It's just me taking shots into the dark, as we all are in some ways.
Well, it's an absolute pleasure having you on, Piotr. And then again, hopefully we can have you back on in the future.
Yeah, thank you so much for having me. It was great, and hope to join you again soon.
Awesome. Take care.